If you own a business location, here's the uncomfortable truth. Many owners think they're insured until they discover their policy only covered part of the loss. Today, I'll show you exactly how commercial property coverage really works. Hi, I'm Marty with JMW Insurance Solutions. We help business owners protect what they've built and make sure coverage holds up when a real claim happens. Commercial property insurance sounds simple on paper. You insure the building, you insure what's inside, and if something bad happens, fire, theft, water damage, the insurance helps you recover. But in the real world, claims don't fail because people didn't have a policy. They fail because business owners didn't understand the three main moving parts of commercial property coverage: business, personal property, contents. The details: valuation, deductibles, exclusions, and limits. Let's break these down in plain English so you can spot gaps before they cost you. Building coverage, what it is and who needs it. Building coverage applies when you own the building. It generally covers the structure itself: walls, roof, floors, built-in systems, and sometimes permanently installed fixtures. But the important question is not, do I have building coverage? The question is, do I have enough building coverage to rebuild at today's cost? A common mistake is insuring the building based on a purchase price from years ago, but replacement costs don't stay still. Labor, materials, code upgrades, and rebuild timelines all change. Real-world claim example: a small office has a fire that damages part of the structure. The owner assumes their building limit will handle it, but the policy limit was set too low based on old costs. The claim pays, but not enough to restore the building fully, and the business has to cover the gap. What to check this week: are you the building owner or the tenant? Is the building limit based on replacement cost, not market value? Do you have ordinance or law coverage? This matters when code upgrades are required during repairs. Contents coverage, where most businesses are underinsured. Even if you lease your space, you almost always need coverage for what's inside. Inventory, equipment, furniture, computers, supplies, tools, and other business property. This is usually called business personal property. Here's what surprises most business owners: contents are not whatever you think it's worth. Contents limits need to match replacement cost in today's world. If you're a contractor, your tools may have grown over time. If you're a retailer, inventory levels change seasonally. If you're a service business, your build-out fixtures and equipment add up fast. Real-world claim example: a water leak damages equipment and inventory. The owner files a claim and discovers their contents limit was set years ago before they expanded. The policy pays the limit, and the business still has to replace a large portion out of pocket. What to check this week: contents limit. Does it reflect your current equipment plus inventory? Is the policy set to replacement cost or actual cash value? ACV means depreciation, you'll get less. Are improvements and betterments included if you lease? Many tenants pay for build-outs. Valuation, replacement cost versus actual cash value. This one is huge. Replacement cost means the policy is intended to replace what was lost with a similar new item without depreciation, subject to terms. Actual cash value means depreciation is applied. Depreciation can be brutal on claims, especially for older equipment, furniture, or systems. What to check this week: confirm whether building and contents are written on replacement cost when appropriate. If it's ACV, ask why. Sometimes it's chosen to lower premiums, but it can cost you massively at claim time. Deductibles, the you pay first number that changes everything. Your deductible is the portion you pay before insurance responds. Many policies have different deductibles for different perils, and in some cases, percentage deductibles. A deductible isn't bad, it's a tool, but it needs to match your cash flow reality. What to check this week: what is your deductible for water damage, wind, theft? If you had to write that check tomorrow, could you do it without hurting operations? The exclusions that create surprises. Property policies often have exclusions or limited coverage for certain causes of loss. The big ones that surprise business owners: flood, usually excluded, separate coverage may be needed; earthquake, often excluded unless added; wear and tear, maintenance issues not covered, certain water damage scenarios depending on policy and cause. Mold can be limited or excluded depending on circumstances. The goal isn't to panic, it's to know what's included and what isn't. The often missed part, business interruption. Many owners think property coverage automatically includes downtime. It often doesn't, or it's too low. Business interruption can help cover lost income and ongoing expenses when you have to shut down due to a covered property loss. Even strong businesses can struggle if they lose revenue for weeks while still paying rent, payroll, loans, and vendor obligations. What to check this week? Do you have business interruption? Is it based on realistic downtime? Think 30-90 days, not or extra expenses included, temporary location, equipment rental, expedited shipping, etc. Quick checklist. Do I actually understand my property coverage? Ask yourself these questions. Building, do I own it or lease it? Building limit, replacement cost or outdated number? Contents, do my limits match what's inside today? Valuation, replacement cost versus ACV? Deductibles, could I pay them tomorrow? Exclusions, flood, earthquake, maintenance-related losses. Do I know what's excluded? Business interruption, do I have it and is it enough? Commercial property insurance isn't just a policy, it's a recovery plan. The goal is that if a loss happens, you can reopen, retain employees, keep customers, and move forward without draining reserves or taking on emergency debt. If you want a second set of eyes on your building, contents, and interruption limits, we'll review what you have and show you any gaps or easy wins. https://JMW Insurance Solutions.com